Hey everyone, it's May, and happy Mother's Day. I want to wish all the mothers a wonderful Mother's Day. So appreciate everything that you do. In this video, we're going to be talking about what went on in the April real estate market for Calgary. And I think you're going to want to stick around for this one. I got some fantastic data to show you. I go through all the charts because we've got some good news finally. But before we get into that, I just want to talk quickly about just what's happening just in the news from what I would call the fundamentals, because the fundamentals are really the economic environment. That's the driving force behind real estate and obviously consumer confidence. And one of the big headlines that I noticed was that Shell Canada bought Arc Resources. Now, I don't know a lot about oil and gas, and I don't know why Shell bought it. I don't even know much about Arc Resources, but what I do know is we haven't seen investment like this coming into Alberta for quite some time. It's really been before COVID that we've seen anything like that in the news. Now, I know we are a very, very highly diversified province now, where even though we are an energy province, we are very diversified, but it's just good news to see that, to see maybe some investment is coming back, and maybe this, this conflict in the Middle East is getting people and companies and organizations with money that are looking at Alberta and saying, hey, maybe we really should get back to looking at what's going on in Alberta and try to get more of our product moved. I know Trump signed a pipeline that can go through Wyoming. I don't know a lot about pipelines and how that works, but what I've noticed after 25 years of doing this is that when we see stuff like this happening and there is more money coming into the province, it immediately spills over into the real estate market. That is the one connection that I've seen. And I've been waiting for this since June of last year, because, suddenly it just seemed like, the taps got turned off. We peaked last year, and, we came into 2025. I was feeling pretty optimistic, and we started out with a pretty good spring, but then all of a sudden, there was so much going on in the news, the election and tariffs and a lot of stuff just got people sitting on their hands. And it's really been just a very, I don't want to say a soft market, but it's been just a stagnant market, or a flat market, maybe is the best way to describe it. And we just haven't seen any real growth. And so I just know that there's been a lot of people sitting on the sidelines waiting for that moment where they just feel, okay, it's going to be good. I can maybe move forward with my real estate plans. I think it's going to be good to be in Alberta the next 5, 10, 15, 20 years. And I am extremely optimistic that things are actually going to start getting better here. I think we're positioned very, very well in Alberta for a lot of things that are going on in the province. And I just think that investment looks like it's going to start coming back more and more into Alberta. And you know what? The stats in April are proving that to be true. So let's get into those stats, because I know you're dying to see them just like me. Okay, I'm going to start off by showing you this little chart right here, Market Watch. And this is the last 7 days in the greater Calgary area. That's Calgary and surrounding towns. So you'll notice that there's been 1,940 new listings that have hit the market. 159 left the market and came back on. We've had 1,176 price decreases. This is important to notice, because 2, 3, 4, 5 months ago, all those months, and I'll say in the last 6 months for sure, there has been just as many price decreases as new listings have hit the market. And that's what was getting our market really flat. And then some pockets of the area, we've seen some communities dropping in price, and to see that many price decreases. So price decreases are dropping, which is great news. We've had 24 price increases, so we don't see as many of those at the moment. 1,108 pending, so they all went conditionally sold. And then 1,056 went sold. Only 346 expired. And that's down like 50%. There was a lot of expired listings that were happening in the last 6 months. 9 withdrawn and 304 terminated. So well, terminated and expired, that's both of those are people that are just leaving the market. But if you put those together, they were literally double that, in the last 6 months. So that just gives you a really good idea that the wind is a little bit changing in our market. Now let's move to this chart right here, and you'll notice there's 2,104 sales on the MLS. That is only down 5.65% from April of 2025. So that's pretty good. That caught me by surprise. The way things were going, I'd wonder if we were going to be down 10, 15% by the way it was looking. And this is good news too. 3,829 new listings hit the market. So that's 5.15% lower. So we're sitting with 5,973, only 1.79% more inventory. And of course, we've had, sales still not as strong as April of last year, but that is a confirmation again that the wind is changing. 2.84 months supply of inventory. So that hasn't changed dramatically. That is, by most standards of most markets, they'd consider that to be a seller's market. We don't consider it to be a seller's market until it gets down to about 2 months supply of inventory. But we're sitting at 54.95% absorption rate. What that means, and this includes all the condominiums, townhouses, all the products, that almost 55% of all the properties listed sold. So you might first look at that and think that's not great, but that actually is really good, because if it was a real buyer's market and the economy was bad, you would see absorption rates of around 25 to 30%. So 55% is pretty good. And 98.25% sale price to list price. But please keep in mind, for people that started high, dropped their price, and then sold, if they got like 99% of the sale price, it's taken from the price that they reduced to. So if they started high, they wouldn't be in that 98.25 if they started high and reduced their price first. So just keep that in mind. The benchmark price, don't forget, that includes condominium, is 568. So that is down 3.46%. And the only reason that that's down as little as 3.46% is because there was a lot of people that didn't sell. And rather than reduce their price, they took their property off the market, which was, to me, was a good thing to do, because that would have just brought the prices down quite a bit more if there was a lot of desperate people. But there was a lot of people that just said, you know what, I'll wait and relist again, maybe when the market improves. So that's why we haven't seen a dramatic drop in pricing. I mean, we're still down, but it could have been a lot worse when you look at the numbers overall. And so far, year to date, the MLS has sold 6,740 properties. So we are down 10.6% year to date. But I have a very sneaky, suspicious feeling that as we get into the summer months now, you're going to see us catch up to last year. I can feel it. I've been doing this a long time, and I know when the wind is changing. Let's take a look also at the Airdrie market. Notice this Airdrie market had 151 sales and 299 new listings with inventory of 494 right there. So, and these are the kind of indicators I look at, because Airdrie was suffering last year. They were seeing, out of all of the markets around Calgary, we saw the most price softening in Airdrie. And to see that that's starting to come back at 51%, sales to listings ratio, that's a little bit better than it was. So I'm happy to see that. Chestermere, on the other hand, 34%. That area, this market is not doing very well right now. Only 50 sales, and they've got 275 properties for sale. So only 34% of them were successful. And it's interesting because Chestermere in 2024 was just flying high and doing extremely well. Rocky View got 196 out of 597, so 62%. And that just goes to show that our luxury and rural communities around Calgary are doing well. Foothills too, 55% absorption rate, so 118 out of 318 properties listed. And so there's a pretty good demand for rural properties, and I don't think that's going to change either. These are all good indications. All right, let's look at this data for detached houses. That gives you a strong idea looking at that where we are in a balanced market. But you can see we're creeping up. Last month, just on detached houses alone, we sold 44.37% of them that were listed. Our benchmark price for Calgary was $745. That's up from March of this year, down slightly, 2.73% from April last year. So not significant change in pricing. There's the hard numbers, 1,095 out of 2,468. The truth is, there should be no reason why you couldn't sell your house in the month of April if you were listed, if you had a detached house. Those are actually pretty good numbers. For people who didn't sell, I'll tell you right now, they just weren't positioned properly. Could have been pricing, maybe they didn't get their home displayed right, or maybe it's a combination of the two. But the demand is there. There should be no reason why you shouldn't be able to sell your house. And the ones that sold, pretty much all sold within 30 days. You can see right here, $600,000 to $700,000 is still the sweet spot. That's, it's almost 25% of the market, but 18.6% of the market is at 700 to 800. So that's just continuing to creep up. We still have homes in that 500 to 600 range. So you can see when you put $500,000 to $800,000, that's the bulk of the detached market for Calgary. That's the real sweet spot in there. That's where the highest demand is. So you should have no problem selling there whatsoever. I always look at this luxury market, $1 million to $1.5 million, just to check in and see how we're doing. 329 properties so far this year have sold in that price range. 116 have sold between 1.5 and 2 million. And look at that, 82 properties over $2 million have sold. So this is a strong market. And again, I'm repeating myself, but these are just strong indications that we're going to be probably see a little bit more of that. I think the demand is going to start to kick in here, because I just firmly believe, I can feel it, I can see it. A lot of people that were sitting on their hands are ready to buy now. And let's not forget, we had a lot of people move into the province a few years ago. A lot of those people have been renting, but they've been here long enough now where they've probably got good jobs. They're feeling a little better, and they're going to start looking at the real estate market too, because obviously if you move to Alberta, one of the things you want to do is own your own home. That's one of the things we work really hard for, is to do that. So here we are looking at semi-detached, and you can see this is close to the detached, 39.93% absorption rate, still in that balanced market area. 690. That's creeped up over the years. Boy, that's incredible, because it's only down 0.29%. But you'll notice, when you come here, 214 out of 536. That's still a good, healthy market. Takes a little longer on average to sell these. You'll see that the price point that most people want is 500,000 to 600,000. That's 28% of the market. But when you look at, the interesting thing about semi-detached is look at all the different price points. There's a pretty good demand, all the way up to 1.5 million. So, more and more, if you look at what we're building, people are getting just comfortable all the time with being in semi-detached. But a lot of people like them because you have all the square footage and just everything that you would get in a detached home, but usually a little bit more bang for your buck, a little bit more square footage, just some extra features involved in the home, especially when you look at these $800,000 to $900,000 semi-detached that are in the inner city. they build some pretty nice stuff with some pretty high-end finishes. So that demand just continues to be there. If you want to be in an older neighborhood but live in a modern home, those semi-detached are great for that. Townhouses dropping off here to 34%. We just have built a lot of them. That's the thing. I don't know why Calgary just tends to overbuild when it comes to townhouses and condos. When developers just see a demand, they just go crazy with it because they make really good profits off this. But then we're left with just having a lot of inventory to try to absorb. So 422.9 is the sweet spot for the price there. But we're down, 7% in pricing from a year ago. And that's just sheer amount of supply and just not enough demand. 363 out of 1,049 have sold. So that just tells you there's just a lot of choice there. So if you're going to be a seller, I'm just telling you, you've got to be aggressive on your price and you've got to really get your property looking its best. You need to try to stand out in a sea of competition. And it's not easy to do, but the right strategy, you can do it. 37 days on the market on average, and you can see that 400 to 500, that's the sweet spot. That's 36% of the market. It drops right off a cliff when you go to $500,000 to $600,000. The good news is there's still a demand for this because the people who buy these townhouses, investors love them. People who have gone through a divorce love them. First-time buyers love them. You get to walk up to your own door. It's as close as you can get, to living in a detached or a semi-detached house as opposed to going apartment condo. And speaking of apartment condo, here we are. We're down at 22% absorption rate. So, almost 80% of the people who listed their condo last month, it didn't sell. So we're coming in at 301,000 for the median price of the benchmark price, and that's down, almost 9% from a year ago. So not great news to see that prices are falling. 432 out of 1920. So there's a lot of choice when it comes to condo. But I got to tell you, I was just out with some buyers this past week looking at condos in and around downtown, around the Beltline in Calgary. But I was still, I was surprised at just how many still people didn't put much effort to having their condo look its best. And we looked at a lot of vacant ones, but they weren't staged or anything. It was just really, pretty boring when you go in there, and it just wasn't easy to get excited about. And there was just so much of it. I mean, I showed them like 9 condos, all around the Beltline that were similar, one bedroom in that price range of $250,000 to $350,000. There was a lot of choice there. So I'm just saying, if you're going to be successful, you got to put a little bit of an extra effort in, and you definitely have to be aggressive on your pricing. I mean, people are going to be shopping. My people did. We looked at all those condos. They got a good sense of what was a good deal and what wasn't. 300 to 400,000. That's still a pretty good demand, but that $200,000 to $300,000. I mean, that's still 40% of the market. So, I mean, if you really look at this is, I mean. To think that 40% is here, and total of 70% of all the condos sell in Calgary between $200,000 and $400,000. That just tells you that we have a lot of product in that price range. So I'll leave you with this thought. Hopefully this has been a really educated, informative video for you to be able to understand what your plan should be. If you're selling right now, or you're going to be maybe moving up, moving down, whatever it is, the reasons that you're going to be moving to the next property, I really think that right now is a great opportunity to make that happen. And the reason I say that is because if you're buying, there's still a lot of choice. So the market's improved, and I don't know, I just had a client here recently, we didn't get quite what they were hoping for their house. We ended up getting 15,000 lower than what they were hoping. But the property I sold them, we got that property at a price that more than made up for the lack of getting the price they were hoping for in their current property. And it's so easy to forget that. And when you have higher levels of inventory, we still have, there's a pretty good choice out there. So that's where some opportunities lie. But we were able to find them their property, put theirs on the market, and I was able to get an offer on theirs within 2 weeks. And a few months ago, that might have taken a lot longer. So that's why the demand is there. And if you're just buying, maybe even for the first time, well, hey, especially in the lower price properties, look at the charts just showed you, there's a lot of good choice there. You just have to be still smart when it comes to real estate. You just don't buy anything. You always want to buy a property that a lot of other people want to own. All right. Hope that's been helpful. All the best, everyone, and we'll see you next month.